Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Thursday, January 16th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that I'm discussing here is for educational purposes only. Please read the full risk disclaimer right there. So, theme of the day, I would have to say for the word of the day, I think for the market is rotation. So I'm going to go over some of the market dynamics that we've been seeing, try to give you an overall view, try to prepare you for what is going on under the hood, and we'll go from there because it's quite interesting. I think, these are interesting times for the market. This is what is always kind of, continues to captivate my interest, because the market is always changing and it's always shifting. And our goal as traders is always to be on the right side of the market. It's not to be stubborn and say, hey, I only want to be in these stocks, and I'm going to get frustrated, and so on and so forth, right? The goal is not to, in my opinion, not to get that way. We can't control what stocks go up and what stocks go down, but we can make adjustments, right? And we can make some movements to try to be on balance, to try to go with where the market is telling us to go, right? Remember, a great analogy, because I always try to mix in sports because I love sports. Two things that I love: trading and sports. So I try to mix the two together quite a bit. But Wayne Gretzky says you have to skate where the puck is going, right? That's a very important right now with the market, and with now that we're in earnings season too. So what's one of the culprits of why we're seeing so much rotation? Well, let's go back to what we saw in bonds yesterday. TLT was up, I think, 1.7% yesterday, and it tacked on another 30 basis points today. So we're trying to form a bullish engulfing candle here. We don't know. I'm looking at a lot of weekly charts, but the week is not complete. We've got one more day to go. Looking at the daily chart, right? We know that we're also hitting some short-term resistance. That's the bottom of the value area. Also note that we kind of have the possibility of a double bottom here. We found support where we kind of hit back here in April of last year. And we're bouncing right there. So that's a good thing. That's going to alleviate a lot of the pressure that you're seeing in different areas of the market. But you may think like, okay, that's good for all stocks. Well, not necessarily. So let's start with the first chart. There's a lot of charts that I want to go through in this video, but I'll try to do it, and I'll try to do it quickly. But take a look at what utilities did today. Why were utilities up so much today? Up 2.5%. Well, it becomes a little bit of a seesaw action with what bond prices do and yields, and what high dividend stocks are doing. So for example, like XLU has a high dividend return. People tend to go into XLU when they want higher yield. Now so that's one particular reason why that they were up. You could also say that they're up too because that there is this need for power generation and infrastructure. There was some testimony from one of Trump's new cabinet members talking about the possibility of nuclear power, and that got stocks like CEG going again today. So, and CEG is in the XLU utility, and so a lot of names moving up, right? CEG is a part of that XLU ETF. I actually don't know the weight of that. Let's bring that up really quickly. So if we bring this up here, XLU and the membership of XLU, yeah, you're going to see that CEG is about 8%. Also, NEE is about 12%, but that's 8% of the ETF. Now let's go to the movers in XLU, right? This shouldn't surprise you. CEG was up 4.8%. So that's a good portion of the gains. Also, the top weight, NEE, which I haven't looked at this chart in a while. Let's do this on the fly. That was up 3% today, right? So really coming back. And for whatever reason, like, because I don't dig into the fundamentals as probably as much as I should for some of these companies, but I believe NEE has a lot more debt. So when there's a relief bounce in bonds, yields go down. This helps companies that have a lot of debt, and I believe NEE is one of those companies. But please do your own research on that because it's not something that I'm looking at right at this moment. So we started with XLU and that big move today. Remember, the semis were your best performing group on the open. It's not how they finished, which we're gonna come back to the semis. But here we go in terms of the SPY, the overall S&P. So there's a couple good things here and there's a couple bad things. A couple good things is that we have moved back into the value area. We got back into the January value area. Why is this important? Because it's the value area for any period, right? So in this period, we're looking at the daily chart. So this is 1 month of data, and it's relying on all of last month's activity. So when you look at all of last month's activity, volume at price, and you combine all that volume and all that price activity, and you put roughly one standard deviation of that activity, you're going to find some really good support and resistance levels. So we're trying to get back into that range of December, and that'll be very interesting to see if we hold on to that. If we don't hold this, that means we're doing more price discovery on the downside, right? And we're no longer moving, staying in that range, and we're weakening. So that's why that's important. That's why I look at this, because it really tells me if we have more of a range bound market, if we have an uptrending market, or if we have a downtrending market. So we're trying to hold on to the range here. So that level's right around 5. You could call it 590. It's 590.33. But the bad here, so that's the good, is that we managed to get back inside the value area. We got a little rejection there at the 50-day moving average too, which this happens sometimes. Once we make a powerful move up here, it's very hard. Like a lot of times we're just going to run out of steam a little bit, run out of power, and not able to do it on the first attempt. I think that's okay. But for now, we're making lower highs, right? And we're in this channel. So we've got a channel going on. I can't tell you when we're going to leave this channel, but we certainly have one going on here, right? Also, when you look at the 1 hour chart, right, there's another level. And that's why for my trading, I'm sometimes I'm short term and medium term trading. So I want to know where there's resistance. And that's the value area for the week, which again, same exact thing. Instead of for the month, this is the value area for the week. And it's based on all of last week's activity. We're fighting with breaking above. We don't have enough. Price does not have enough power right now to get through that. That level's 594.81. So notice I'm giving you an upside level and I'm giving you a downside level to watch, right? This way you can kind of get an understanding of what this market is doing. It's not powerful yet enough to break out of this. It's not breaking down yet either. So we're kind of in no man's land, because the bottom of value is for the month is right here. All right, let's talk a little bit about the cues, right? Because this is seeing more I mentioned the theme of the day is rotation, right? Now we've been seeing this for a while, right? Since the middle of December, we've been making lower highs. It's something that you've been hearing me say a lot: lower highs and lower lows here. It's even more of a channel. Like I could draw a trend line in here too. I think that would make sense to do and say, hey, we've got a downward channel that's happening here. Now, let's put things in perspective. Is this the end of the world, that this is seeing profit taking, right? And a little bit of rotation out of? No, I don't think so. And as I've said too, we don't have any of the major names in this index, the top weights, reporting earnings yet. But certainly there's things like Apple that is beginning to break down, and the money is being put other places, right? So Apple was down 4%. That is now, it tried to rally out of the value area. That's a rejection there, right? So Apple is not where I would want to be right now. And I've been watching this. I tweeted out that the possibility of Apple coming back in here. I didn't put on any trade in Apple, but I was watching, right? And it got rejected in here. So I can't really tell you why it was making this move up here either. Maybe they had their buyback plan really going here. But regardless, this is not where the momentum is, and that's affecting the Qs, and it's affecting the S&P somewhat. So are a number of other companies that are the higher weights too, right? I have a screener for this. I look at what the big names are doing every day, right? Notice how they're all red today, right? All of them are red today. So again, this should give you a picture of what's happening right now. Now, again, this could change. Why could this change? Because you're going to have Netflix report next week, and then it's going to be all these other names that are here that are in here are going to report. So this might actually create some buying opportunities in a couple of these names. We'll see. All right, but here we are. We're back checking the 50-day moving average. I wouldn't say like this is death to growth stocks or anything like that. They just got way ahead of themselves. And what a good relationship to watch at this point is growth versus value, right? So this is a chart that I think is very interesting. I'm going to use the weekly chart here just so that you could go back. I tweeted this out shortly ago, but we're just coming. So growth has had exceptionally, made some exceptional moves. but they can't go up in a straight line. What typically happens, what do the institutions typically do from time to time? When things get stretched, when valuations get stretched, and there's been some pretty mature moves, they take some money off the table and they allocate it other places. Right now, that's good rather than just allocating it to cash. Because going back to what we saw, and I'm going to bring up the next chart, which is RSP, right, which is the same names that are in the S&P 500, but instead of market cap weighted, they're equally weighted, right? And this is making a nice recovery. Remember what happened back in here. See if I can get this appropriate for you. But remember, we saw like, I don't know, like 15 straight red days, right? This is not healthy for the market, right? And finally, there was this capitulation to the downside that was on the Fed meeting day, but that's not a healthy market. Now, I get it. Growth stocks were acting really well over this time, right? Up until, maybe a little bit further into this. And I get it. Retail traders love growth stocks. So, that's very good, but you have to understand, like, that's not sustainable to have only growth stocks go up and nothing else was going up. It's better to have a much more balanced market where you've got other areas of the market at least participating a little bit. So, if you're just straight a growth investor, I think that you just want to understand like how great last year was for growth stocks, and just understanding that that can't continue forever, that these stocks need to see some profit taking, some rotation out of, and then they rest for a little bit. And then there'll be money that'll be rotated back in. And probably once we hear some good stories come out of earnings season, we really have mostly gotten just the financial companies so far. So I would say be patient right now and welcome some rotation because there's a lot of opportunities in other stocks. Let's talk about that for a minute. And you know that I've been talking about this quite a bit with breadth, but I tend to look at the 4-week new highs versus 4-week new lows here. Right? Notice what you have here. You've got 155 names that made a 4-week new high in the S&P and only 31 names that made a new low. So that's pretty darn good. Now let's look at see what groups are doing it, right? And this is something that I put out in my midday note on Substack, which you could read yourself, midday and get a glimpse of this. I try to make that midday note like something that you could read in about 30 seconds to a minute so that you could extract the most amount of information out of what's going on in the market in a particular day and as quickly as possible. But take a look at what groups are dominating the new highs. You got financials in here. Kind of makes sense. We've seen good earnings from Citigroup, Wells Fargo, JP Morgan. Morgan Stanley's earnings were good too. Bank of America's earnings were good. They've already those two last names really rallied into their report a little bit. So they didn't act as well as the first ones that came out. But still, you've got some nice strength in financials. That's a good thing, in my opinion. Plenty of trading opportunities there. Right? And then you have the industrials. Now, remember, the industrials were acting very well at different parts of last year, and then they kind of took a pause, just like I'm talking about with what's going on with some of the growth stocks right now, right? So XLI, right? And I think it helps to kind of look at these in terms of the weekly chart, even though the weekly chart isn't complete, but that's a pretty good look here, right? That's not bad to see this. Now, what I particularly like when you break down the industrials a little bit more, I really like, and I've been liking the aerospace and defense group. This has not really had much of a shakeout, but it's been consolidating a little bit and it's turning back up. Right. So this is pretty good. I like what's going on here in the aerospace and defense. This is actually the largest weight that I have in the TTG trend portfolio. I put XAR back in that portfolio about a week ago. And then I also have some individual names within the group. So, this was a name that I traded this week, HWM, making new highs. Right. And that's a growth stock too, so, you don't have to draw the lines between growth and value because people get depressed when sometimes when you talk about value stocks, but some nice setups. What about this one this week? Now, I didn't trade this one, but look at the Kratos Defense and Security Solutions. It's a monster breakout, right? So what I'm trying to do for you in these videos is tell you where the momentum is. Now, would I chase this name here? No, I wouldn't. But we've been talking a lot about energy names too. And there's been select areas of energy that have worked great. Look at not EQR, sorry. EQT, sorry. right? This has been a huge move. So you're telling me that you can't make money in some of these stocks? So I got another VPOC here. So I'm not, I have EQT on and I have AR in my longer term portfolio. AR saw call activity yesterday, still going. TRGP is still going. Look at the move in TRGP. Look at what happened in Lennar and LNG. I was going to say Lennar, but look at this, it's still going, right? So expand your horizons a little bit and understand that Reddit and Tesla are not going to go every single day, right? Those are expensive stocks, right? So I could go through, I'm still in EXE, which has been making a nice move. I'm still in, even though crude wasn't up today, sorry, not ET, right? Again, this one's a little bit, some of these are a little bit slower moving, right? But, let's look at Reddit, right? We talked about Reddit yesterday. It's still doing okay, but it's lost its momentum, right? And, this was a name that I was in, for this ride up, right? But look, it's struggling here, right? So again, look at these things, this stock, if you go back to October, the stock was 51 bucks. Right? It's now 100, went up to 145. That's a huge move. Let these things consolidate and relax a little bit. And just realize that these made gigantic moves. Let something else in the market make another move. RBRK, right? Because everybody's looking. So the issue too is, and I like this chart by the way, right? But everybody on Twitter is looking at the same 5 to 10 stocks, right? You're doing yourself such a bigger service once you realize what's going on in some of these names that there's going to be some profit taking. And I'm in Tesla, so you could be, it's not like you don't have to abandon growth stocks altogether, in my opinion. Just understand that they've kind of lost some of their momentum. Now, Tesla is just an inside today, and I'm still long this name, but it's tough being in a name down 3.4% while the rest of the market is going up, such as RSP. I mentioned the equally weighted S&P was up close to 1% for the day. All right. So again, you just, in my opinion, holding other things than straight up growth stocks and wait till some of these names report earnings and then kind of go from there. What else did I want to discuss today? I mentioned the semiconductors. I doubted this in the beginning of the day. I just didn't think that the semiconductors right now are showing momentum. Now, it may just take more time. Notice what's happening here. They're not breaking down. Every time this thing has gotten to the lower end of the range, it's held, but it's just going sideways. It just needs more time, right? And it wasn't a shock to me. And if you went long Taiwan Semiconductors for earnings, you're probably pretty happy. Stock was up 4%. But does it look tired up here? Yes, it does, right? It's having difficulty taking that next leg higher. So, and I would keep an eye on a couple of them. Now, NVIDIA is having troubles, right? It's just, and again, troubles in a relative way. It's not breaking down, but it's just not doing much, right? And there's such thing as called opportunity cost, right? If you're watching these names and you're getting frustrated in these names, right? You're losing time, right? We only have so much time, right? And patience is one thing, and that's fine, right? So you could be patient in some of these things too. But while the rest of the market, and again, this is very different than it was a couple of weeks ago, where breadth was really disgusting and there wasn't a lot of alternatives that were going on, right? Hence this, right? Just going back to December, the new highs were contracting, right? And the new lows were expanding, right? We're starting to see that flip. Right. And that's what has me more excited about this market is that you could be objective and say, I'm just going to allocate my money and some of my trades to the names that look more constructive and that have some momentum to the upside. Right. And I'm just going to mention this too. Right. By doing this, like you could simply do the same thing that I'm doing. I pull this information from Bloomberg, but you could use FinViz and do the same exact thing. Right. Some people like to see the option activity. That's fine. Option activity is just a tool in the toolbox. That's all it is, guys. You could find the same exact information by just going through the 52-week new high list and going through some charts, right? Going through some charts, having a scanner in the day and noticing what names are perking up are advancing, we'll do the same thing. Now, I use option activity too. It gives me some clues and some names that maybe weren't on my radar, but it's just another tool in the toolbox, right? And you can sort this out yourself by doing, instead of watching the tape all day long, you could just watch names that are moving, right, via a scanner, and you'll figure it. You'll often come to the same conclusion. All right, so moving on. Yeah, so two names that I'm watching in this space are Broadcom. But again, Broadcom has been tired. I thought it needed to consolidate a little bit more. And so, this was big gains, but it will eventually move out of this range. Marvell's another one to watch too, because it had good earnings. Again, it hasn't really done much over the last month, but I think it's still important to kind of keep an eye on, right? So it's important to kind of have these names on your watch list because they will eventually move, right? And have some alerts, and go from there. All right, guys, that's it for today's video. Have a great night. I hope this video helped. If it did, like it. This is what we do all day long in my trading room is I go through it and I dissect things. I try to get on the right side of the market. I've certainly upped my allocation to energy and looked at other areas of the market than just tech and growth. And so far that's working. It's working in what I feel is a challenging market. And I look to continue to outperform for the rest of the month. Have a great night, guys. See you tomorrow.